Because that 1,000 should only be risking $20 a day at most. Because whenever that person has $1,000,000, they're going to be risking 20 grand a day, right? That's when it becomes extremely significant to most people in their mind. But it's even more significant at the start because you have to build those good habits early. And trust me, if you view the best way to view a scalper or a day trader is not in terms of their system, as in 100 trades. It's better to view it in terms of days, right? So let's imagine you're a day trader. If you can win 3 days out of 5, you'll always do well. If you can win 2 days out of 5 with good risk reward, you will still do well. So between a 40 to 60% win rate as a day trader is what you're aiming for. You're trying to be right just more often than you're wrong. So over time, it's kind of above the 50 towards the 60%. But then you have to take the law of large numbers and say that's true for both individual trades as well as days. Yeah. So if you can have 100 trades, individual trades, and have a 7 loss streak, then if you have 100 days of trading, you can also have a 7-day loss streak. So your portfolio and your mental game needs to be equipped for that. And that is why you risk 1 to 2% per day maximum. Day traders probably shouldn't even risk that much. Because if you're actually truly day trading and you're trading every day, you've got 200 or 250 trading days a year. Sometimes up as much as 300 trading days in a year, right? You're not swinging for home runs every day. If you can make 3% on a good day and have more good days than bad days, your portfolio will grow a lot faster than you think. Salamov, if we plan the orange path, a possible reversal, and have our setup ready, is it okay to enter it, even so we were in a trade in a green path, cut the trade earlier with a small loss? Does it have bad effect for the mindset when growing as a trader? So I think what you mean is it okay to take the short trade on the orange path? Absolutely. You could say that that's a separate trade, right? You could say that if it takes the orange path and my first trade idea is clearly invalidated, I will exit that trade where it's invalidated, and if I get the setup, I will enter a short trade. You have to be mentally flexible as a trader. You definitely don't want to marry a bias. But remember, it has to be pre-planned because you don't want to flip-flop. That's one of the most dangerous things as a trader, is finding yourself flipping back and forth from bullish and bearish. Michael H04, so is it better to trade reversals? That's an unanswerable question. Is it better than what? And to say is it better, that would also suggest that there's a right or a wrong answer, which often in trading, almost always, there isn't. There's no such thing as a good trade or a bad trade. That's all very individual specific. So I might be better at trading reversals. You might be better at trading trend following, right? The continuation, which are broadly the two types of trades. So that's totally up to you. You figure that out yourself, finding out what your best trades are. That's why you bet very small at the start. That's why you bet $1 per trade or less. So you can take hundreds of trades and figure out, I actually am really good at reversals. I'm quite bad at whatever, momentum scalping. Senor Pepe. On when winning section on partial profits, how can I know I'm experienced to do that? And the taking partial profits is more tempting to swing position traders, right? Because the trades they take are more longer than scalping, right? I don't really understand that question. Like, it shouldn't be tempting to anyone. All of this comes back to my original point, which is planning ahead of time. You will never be tempted to take partial profits if you have a plan beforehand. Okay? This is the whole point. You should not be discretionary in any way as a new or even developing trader. You should have your rules already set. So if you are a swing trader, you should say, I can take partial profits if this happens. And write it in big fucking capital letters and pin it to your forehead if you need to. It's no different as a scalper as it is as a position trader. You have rules, you stick to those rules. Then if you're wrong, you can say, doesn't matter, I followed the rules. And if you're right, you can say, great, my rules were correct. But on the when winning section, partial profits, how can I know if I'm experienced to do that? If you're asking the question, you're not experienced enough. And that's totally fine. I'm really glad you asked that. Because when you know, you will just know. Right? It will be after taking enough trades to have some data. In an ideal world, you should have taken 100 trades and be able to say, over these past 100 trades, if I had taken partial profits, and you're journaling them, you say, if I had have taken partial profits where I wanted to, because I wrote in my journal, wanted to take partial profits at 27,500, but didn't, then you can look back and say, all right, actually, if I always took a partial where I said I would I have made more money or lost money? Very simple. You have to, though, first of all, have rules, stick to them, and write these things down and remember them and log them, because when you come back, that's your invaluable information. That's gold to you as a trader. That's where you can actually crunch the numbers and find some real data. Salamov again, when we are in trend following trade or upcoming bull market trend following trade, is a plus EV to hold the trade for a long period of time, even so it's roomy. I don't. That's impossible to answer again. I can't tell you if a hypothetical trade is plus EV. The only plus EV trade is one that you know the stats of. So you can back test every bull market, right? Not that we have very many. You've got probably 4 that you can look at. But you can look at each of them and say, define what a trend following trade is. Define what a few weeks, define what several weeks is. Long period of time, that's too ambiguous. Several weeks, again, too subjective. Define it. And define what reaccumulation phase is before the continuation. Define all those terms, go and test it, and say, let's imagine it was, your definition of a bull market was when price broke above the previous all-time high, yeah? Classic definition. So in December 2020, we broke 20k, that's officially bull market. You enter your long, stop loss goes below the previous swing low, price goes up. Then you're trying to find out, is it EV to plus EV to hold the trade for a long period of time, even so it's in reaccumulation phase? So you have to see what are those things? What do they mean? Because they're just words, and they're very shallow words at the moment. So you have to make them objective and then test it. But when you're in a trend following trade, you don't do any of that shit, because before you even enter, you already have your reasons to exit, right? You're saying that I'm entering. Let's just imagine, because the best way, if you want to exit a bull market, let's just look at this, right? If you want a really simple kind of bull market strategy, it would be to enter, obviously, your all-time high breakout with confirmation, right? So if you want to keep it simple, you would enter here on a weekly. So you would wait for a weekly close above the previous all-time high. You would then enter. Your stop would go below the weekly impulse candle, because if it's a true breakout, it won't come back to it. And your target is open. It's not defined. Your reasons to exit would then be a weekly market structure break. So as price goes up, you mark your market structure levels. We have a low there. Then we have the break of structure. So that would have been your swing low, the weekly close. You have another one here as it goes up, weekly close. You then have another one as it goes up, because the highest weekly close was here. This was your weekly level. On this candle here, it gets broken. So you start to exit your position. You exit some of it here. You probably wait for a bit of a retracement to exit the rest of it. But somewhere around here, let's imagine within this broad area, I'm not going to say you wait for it to go all the way up. You could, but I would say on average, you'll exit somewhere in that area. And so let's just call it the very middle of that area, just to be simple about it. And there's your entire bull market trade. Then when you look back, you can say, I caught the majority of this move, right? Because from all-time high, let me do this. From all-time high to the very, very top, so from all-time high breakout to the very, very top, I caught, no, actually, I'll do it like this, right? There we go. The entire move was 230%. I caught 117% within that, right? But when you look at it with your confirmation and your exit, you caught the bulk of the move and you also avoided the downside and you didn't bag hold it to zero. You got a 6-hour trade, which, bear in mind, for a bull market trade, that's like your entire portfolio, right? If you're talking about a multi-month bull market trade, that's going to be where you convert all your cash into Bitcoin. So you've had 117% of your whole stack just on that trade. So it doesn't matter if it's a million years trade or a million or a fucking 1 second trade. The principle's the same. Reasons to exit should be set before you enter. And you generally want to exit. The simplest way, that's why I keep going on about it, the simplest way to exit is just fucking market structure breaks. Market structure breaks almost, not almost always, but with a higher probability than anything else, denote a trend shift. So if you're doing any type of trend trading, exit when market structure is telling you that that trend is likely over. Good question. Slytoshi, thank you. Or sorry, you're welcome. Adam, GM, I never use stop loss in a checking trading view. Looks like they don't have an option to connect Coinbase trading view. Is there any ways to connect? Because the actual exchange doesn't have stop. Coinbase does have stop losses. You don't have to connect Coinbase to TradingView. Just use the Coinbase exchange. But actually use the exchange, not the retail Coinbase.com or app or whatever. There's an actual exchange. It should look like all the videos you've seen of exchange, of Bybit or Binance or any of them. If you really are stuck, go to YouTube and type in how to set a stop loss on Coinbase. It will show you. But there absolutely is an option to have a sell order or a buy order, and you're not going to short on Coinbase, so just a sell order below your current price. It takes you out of position if it goes that way, right? Slytoshi, do you ever use mental stops when active trading or always a hard stop? I can see our mental stop leaves room for error. Again, yes, that's discretion, and discretion must be earned, right? The reason I ask is in stocks, I was taught there are stop loss hunters, and if you had mental stops, they couldn't see the stop you entered in your broker. Forget that conspiracy theory fucking bullshit, right? I understand why you're saying it, not having a go at you. I used to think that shit too. It's just like the example I gave earlier about wanting to avoid getting wicked out on a random move. It's gonna happen, right? Nobody cares about hunting your $3,000 position size stop loss, except for FTX, who actually were doing it. But in general, even a position that is 7 figures is not that simple to hunt, right? You hear about people getting cornered for short squeezes or getting offside, and you sometimes see these big moves in the market, but they don't go to grab someone's stop. If there's a big player and they're getting hunted in air quotes by another big player, It's going to just move the market in general. So no, that's terrible advice by whoever is perpetuating it, because it's just giving you an excuse. It's giving you two excuses. It's giving you an excuse to have a mental stop, which is risky, and two, it's giving you an excuse for being wrong and saying, "Oh, someone hunted me." It doesn't matter. Getting hunted is just part of the game. You are not the biggest thing. The best way to understand is you are not getting hunted, right? And actually, I'm pretty sure I covered this in another lesson, but there's a big misconception in the market that someone is trading against you, right? Because we do talk about, like, it's a PvP market, so it's player versus player, and there's someone on the other side of your trade, and your opponent is doing this and that. Those are just mental constructs. But in reality, when you buy or sell, you are buying from a big pool of liquidity. You're not buying from one person. And your position, if you ever look at your trade execution tab, go and place a market order for whatever size, and then go look at your trade execution. It will almost always execute in multiple lots. So if I placed a 1 Bitcoin market order and I entered it long, and I went to my trade history, I would see 0.13, 0.25, 0.002, 0.4, etc., 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 all the way up to $1. Sorry, 1 Bitcoin.